코스트코의 핵심 전략은 멤버십 기반의 모델입니다. 고객들은 코스트코 매장에서 쇼핑하기 위해 연간 멤버십 요금을 지불합니다. 이 멤버십 수익은 코스트코 총 매출에서 차지하는 비중이 2% 미만으로 매우 적지만 사실상 대부분의 이익을 만들어냅니다. 멤버십 요금은 직접 비용이 거의 들지 않으므로 이를 순이익으로 간주하면 코스트코 영업이익의 약 90%가 이 멤버십 수익에서 나온다고 할 수 있습니다. 즉 상품 판매에서 사실상 손익분기점을 맞추더라도 멤버십 수익만으로 이익을 낼 수 있다는 의미입니다.
Costco is often cited as a paradox in retail. It operates on razor-thin profit margins around 2 to 3% net margin yet delivers exceptional stock performance and investor returns. This success stems from a unique business model and execution that drive high sales volumes, strong customer loyalty, and efficient operations. Below, we break down the key factors behind Costco's ability to generate high shareholder returns despite low margins. Costco's core strategy is its membership-based model. Customers pay an annual fee, standard or executive membership to shop at Costco's warehouses. These membership fees are a small portion of Costco's revenue, but account for the majority of its profit because they come with virtually no direct costs. In fact, those fees contribute nearly 90% of Costco's operating income when treated as pure profit. This means Costco can essentially break even on its merchandise sales and still be profitable thanks to membership income. In 2023, Costco's membership fees totaled about $4.6 billion, which nearly covered its operating profit of $8.1 billion. Costco has built a large and loyal membership base that provides recurring revenue and stability. The company boasts roughly 75 million paid members globally, and its membership renewal rates are about 90% or higher year after year. Such renewal levels are exceptionally high, indicating that once customers join, they overwhelmingly keep coming back. This subscription-like revenue is predictable and growing. Membership fees tend to rise over time as Costco occasionally increases the fee and adds new members. For example, a recent fee hike is expected to directly boost operating income by a few $100 million annually, underscoring how membership dues directly impact Costco's bottom line. Steady revenue and sales growth. Costco delivers reliable top-line growth year after year, which is crucial for a volume-based model. The company's revenues have grown at a mid to high single-digit pace annually, on average, through a combination of new store openings, increased sales at existing stores, and rising membership fees. In fiscal 2023, Costco's net sales were about $242 billion, up from $192 billion just 3 years prior, a significant increase. Even in tougher retail environments, Costco manages to notch growth. For example, in a recent quarter when overall U.S. retail sales were nearly flat, Costco still grew its sales by 6.4%. Same-store sales tend to rise modestly each year, indicating more spending per member, while new warehouses contribute additional revenue. This consistent revenue growth provides a foundation for earnings growth, even if profit margins are thin. Investors take note that Costco rarely experiences sales slumps. Its business shows resilience across economic cycles, as consumers flock to value in both good times and bad. Robust earnings and cash flow. On the earnings side, Costco's net income has been growing at a healthy clip, largely by virtue of increasing sales volume and membership fees. In fiscal 2023, Costco's net income was approximately $6.3 billion. While the margin percentage is low, the absolute dollar profit is high and has trended upward over the years. Importantly, those membership fees continue to inch upward. Membership fee income grew about 6% in 2023, and tends to grow in line with membership count plus occasional fee hikes. Costco's operating income growth shows that the model scales. More sales and members gradually lead to more profit, even if each dollar of sales carries only a few cents of profit. Another strength is Costco's free cash flow generation. The business generates significant cash from operations, thanks to upfront membership fees and efficient inventory management. This cash supports warehouse expansions, dividends, and occasional large share buybacks or special dividends, all of which benefit shareholders and signal financial health. High returns on capital. One might assume a low-margin business would have poor profitability metrics. But Costco defies that with exceptional returns on capital and equity due to its efficiency. Costco's return on equity is around 30% in recent years, and its return on invested capital is roughly 18 to 20%. Both figures are well above retail industry averages. These metrics indicate that Costco uses its capital very effectively to generate profit. The high ROIC, in particular, reflects the power of Costco's model. By turning over inventory quickly and leveraging supplier financing, Costco needs relatively little capital investment to generate each dollar of profit. A nearly 20% ROIC means Costco creates significant value for shareholders for each dollar reinvested in the business. This also provides confidence that Costco can continue to grow without wasting money. Every new store and each additional dollar of inventory is contributing strong returns. Such financial efficiency is a key reason the stock market rewards Costco with a high valuation. Outpacing the market. All of the above factors have translated into stellar stock performance over the long term. Investors have seen Costco shares significantly outperform both the retail sector and the broader market. For instance, over the past 10 years, Costco's stock delivered approximately a 24% annualized total return, compared to about 11% annualized for the S&P 500 index. In practical terms, an investment in Costco a decade ago would have grown over 700%, vastly outgaining the overall market's return. Even on shorter time frames, Costco has excelled. In the year 2023, Costco's stock price rose roughly 60%, reflecting strong investor sentiment as earnings beat expectations and membership metrics remained robust. Such performance is especially notable given Costco is a massive, mature company. It shows that Costco can deliver growth-like returns with a defensive, low-risk profile. The stock's trajectory has been up and to the right for decades, supported by consistent financial execution. The financial takeaway is that Costco's growth in sales, disciplined cost control, and reinvestment in new stores' memberships lead to steadily increasing profits, which in turn drive its stock higher. Investors see that even if each sale is low margin, the sheer volume of sales and fees produces reliable profit expansion. This dependable growth, combined with efficient use of capital, helps explain why Costco's stock has been a long-term winner. Premium valuation multiples. Costco trades at valuation multiples that are much higher than the retail industry average. As of late 2024, Costco's forward price-earnings ratio was in the range of 50 to 60x earnings. In comparison, mega retailer Walmart traded around 30 to 35x forward earnings, and the average for other big consumer retail stocks is often in the 20s. Costco's price-sales ratio is about 1.5 to 1.7x, whereas most retailers trade well below 1x sales. By traditional metrics, Costco's stock can seem expensive or priced for perfection. Yet this high valuation has persisted because investors believe Costco's business quality and growth outlook justify it. In essence, the market is willing to pay a premium for Costco's combination of stable, subscription-like revenue and proven growth. One analyst noted that Costco's recurring revenue model through memberships is a rarity outside the tech world, warranting a higher valuation. Additionally, Costco's ability to execute a low-margin, high-volume strategy better than anyone else creates a moat that is hard for competitors to breach. This gives investors confidence that Costco's profits are durable. High returns on capital and growth outlook. As mentioned, Costco's high ROIC and efficient growth signal a strong business, which investors are keen to own. When a company can consistently generate 20% returns on invested capital, reinvest profits into new stores, and earn similar returns, it creates a compounding effect that can drive double-digit earnings growth over time. Analysts currently project Costco can grow its earnings per share by roughly 10% annually in the coming years. While not explosive, that growth rate is quite solid for a company of Costco's size and is higher than that of many peers. This expected growth, coupled with Costco's track record of meeting or exceeding expectations, feeds a positive investor sentiment. Shareholders are essentially betting that Costco will keep doing what it's doing, expanding slowly but surely, increasing sales and membership dues, and gradually boosting profits. So far, that bet has paid off handsomely. The stock's multi-decade uptrend and management's consistent execution have earned Costco a reputation as a reliable investment. As a result, many investors are willing to pay a premium today for Costco's predictable future earnings. In the next episode, we'll delve into the factors that contributed to Costco achieving an annualized total shareholder return of about 24% over the past decade, examining the specific numerical impact of each element. Building on this analysis, we'll also forecast how the total stock return might evolve over the next 10 to 20 years.